Good morning, it's Thursday the 24th of November. This is the Phoenix Blue Morning Update brought to you this morning by Tom Colley. Biggest influence today will be we've got the US bank holiday. We expect low liquidity. It's Thanksgiving, so it's a proper full-on bank holiday. So there will be empty banks, there'll be empty trading floors over there. So bear that liquidity in mind, particularly as we go into the afternoon session. But I think it will make everybody, even and other markets, cautious through the day. And I expect that will follow through tomorrow. Normally, if you get a bank holiday of that nature on the Thursday, Friday hardly ends up being a day. One thing that will influence that is what we've got on the news front. Well, looking through yesterday for a start, well, first thing today is we've had the only news of the day, which is the German info business climate. That came in virtually bang on expectation, so we didn't see much from the markets in that respect. Yesterday, we had the autumn forecast statement from the new Chancellor. That caused some intraday movement on the pound. Prior to it, the pound did seem to not be quite as strong relative to the dollar as it had been over the last couple of weeks when the dollar's been so strong. But subsequently, after the statement and into the afternoon, we did see a resurgence of the pound, which will make us again more interested in the pound crosses. But yesterday we were somewhat holding off those, looking for intraday entries, etc., etc. We then had a big move or a big number for the core durable goods orders out of the States. They came in at an actual figure of 1 ahead of a forecast of only 0.2. So really major advance over what was expected. That gave the dollar another push when maybe we didn't expect it this week. But that was such a good number that it gave that dollar a push through the next level. We'll have a look at the dollar index in a moment. We got unemployment claims that came in slightly higher, but not a big issue. We then had the crude oil inventories, which came in at a negative number, which means that the inventories were reduced. So the oversupply beginning to, or in the short term at least, beginning to wash out of the system. We saw a reaction to that, but much of what is in crude at the moment is driven by still driven by the OPEC agreement talks on that, and there was good news, then bad news, then good news, as there always is on that. There still is probably now still as much uncertainty as there is certainty, but we should see that come to a conclusion next week, and then be in a position to take a position in the crude market. The FOMC minutes also came out last night. They were very, very much as expected. No particular movements in the dollar or on the dollar on that data coming out. Everything's still pointing to that 0.25% rise, which is priced into the markets virtually 100% at this moment in time. If it doesn't happen for any reason, then we will see some carnage. I'm sure, with all that being priced in. In all honesty, we're looking forward probably for information or clues about how additional rises are perceived going forward into 2017. Okay, so over to the dollar index, and this is the monthly chart. So this is the clear level that we've been talking about breaking at the top of this consolidation here. This is the monthly bar, as I say, but really what I'm purpose of showing you this is we're now at this level here. As I'm recording this, price is still in and around that level. It hasn't clearly broken yet. We might not get any information on that, or we might not get a response to that. But one way or the other, we'll either be looking for a break above that and a pullback to take it short. And there's very little in the way of resistance on the way up here. The next monthly level is right up here, around the 110s. Waiting to see how that plays out. Feels like the market needs a pullback, but we've been saying that we will be looking for that pullback. We'll be looking for intraday pullbacks if we don't get a break below this level here. If we come back to this level, that's as far as we'd see the dollar index going, but that'll give us a little bit of relief and allow us into markets that we would love to trade, but they're just at this moment in time going and going without giving us any pullbacks. This is the daily chart of the dollar yen. Obviously, as I always say, yen strength, remember it. So what yen weakness is to the long side. We're clearly above this most recent level here. We're looking for, again, for any sort of pullback into this level or even this level to correlate with the dollar index. The yen has been probably the weakest market against the dollar over the last few weeks since the election. We're starting to take notice of all the yen cross pairs, because when this pullback comes, we may not pull back as far as this level here. It may be a smaller pullback, and we haven't got a level to trade. We'll be looking for levels on the cross pairs, simply because almost all the charts are very much strong versus the yen. So there's a lot of weakness there, and normally we like to purely trade the strongest versus the weakest. But when you have something that's as weak as the yen's been, we can step down a level and trade one of the other currencies against it. Okay, over to the euro. Bear with me. There we go. We've had price come down to this. Basically what's the 2015 lows here. It's been rejected so far today on this daily chart. We short this market from the retest of this intraday channel here. We've taken profits off. We've got the stops at break even. As I say, we're seeing a rejection of that level now. Another market to be very aware of is gold. We've got a key level we've broken here. There's a big number through here as well, which is 1200. In 2015 and before, 1200 itself as a round number was really quite a significant level. But over this year, it hasn't played such a part. So there is actually a more significant level there. We will watch 1200 and we'll be looking for a price action entry at that point. We may well be in a position to take a limit order from this stronger resistance at that level around the 1206, 1207. One other market I wanted to show you today, and it's unusual to show you the S&P on the 1 hour, but the S&P's made new highs this week, so's the Dow. Now, one of the issues you tend to have when a market makes new highs is you've no feeling for what might happen ahead. There's no significant level that you can retrace. What we've clearly got on this hour chart, and is also starting to show on the 4 hour chart, is a range. If we see a break from that range in either direction, it gives us the opportunity to trade with more confidence. So a move above there to the long side, pull back, and away we go. I've got on this chart a short-term channel marked in. We may see price come to that level and then pull back from there. But definitely something to be on the watch for here. Now, we are going to clearly see here is going to have a risk-on scenario. We looked at the gold chart a moment ago. We've talked about equities and stocks being long on the basis of seasonality, and also potentially on the proposed bringing back of US dollars for US corporations on a one-off lower tax rate. So everything pointing to the long side at this moment in time on there. We've got this level around the 2204, 2205, which would be an interesting level to trade. Okay, guys, that's it for today. As I've said, somewhat cautious trading because of the bank holiday. We'll have a new week next week. Next week, at the end of next week's non-farm payroll. And then the week after that, I think we've got the ECB, and the week after that, the Fed. Okay, guys, so take it easy today. I expect tomorrow will be very much the same, but we'll look again at that in the morning following today's trading sessions. Thank you and goodbye.